Good morning, traders. It is Tuesday, the 28th of March, 2017. It's 8 a.m. Chicago time, 9 a.m. Eastern. Thanks for joining me for another Trader Bite. Early nourishment for a trading mind. The goal here is to walk you through a process of looking at the markets in a consistent way every day so you can have a plan in mind. So when it's time to execute, you're not doing the analysis at that point. You're just playing out one of your numerous hypotheses. Think of yourself as a trader who is also a lab technician doing experiments on the market. Um, let's start out with the risk disclaimer. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning is mixed overall. Crude oil is strong this morning, trading 48.32, up 59 cents. That's 1.26% higher. We have a gap up over the three-day range. I'll show that chart near the end here. Next up is the DAX. The DAX is up 68 points, trading at 12,088, up a little over 0.5%. Gold is almost unchanged. It's up $1. The weak sector is the small caps. Again, the Russell getting a beating. I wouldn't call it a beating, but a continuation of the sell-off, down 4.6 points, trading at 1352 and 30 cents. Followed by the S&P, which is only down about 3 points, 2.5, 3 points, which comes out to 0.12%. That's where the market stands as far as the news. The big piece is, well, yesterday the Dow continued its losing streak. The Dow had an eighth straight day down, which hasn't happened since 2011. Since August 2011. The Dow has had a losing streak of this magnitude on just two other occasions, September 2001 and October 2008. You remember October 2008, big month. The other thing we need to keep an eye and an ear on through your news feed is the Scotland vote on another referendum. The Scottish Parliament will vote today on whether to hold a second referendum. They may have already done so. I haven't checked. Second referendum on the independence from the UK due to Brexit. The vote will come in just hours before the UK Prime Minister May is set to trigger Article 50, which starts a 2-year process of the UK's exit from the Union. That's really it. As far as what we're looking for today, we just got Case-Shiller, and this morning we had advanced good trade balance. So Case-Shiller came in this morning well, let's see. Case-Shiller came in this morning strong, month-on-month, 0.86 versus 0.7. Earlier today, preliminary wholesale inventories, which came out about a half hour ago, is at 0.4 versus 0.2. Higher inventories are worse. February advanced goods trade balance, negative 64 billion versus negative 66.4. This is the widest deficit in 22 months. And then coming up later today, we get consumer confidence, U.S. consumer confidence index for March, expecting 114. This is a high tier number. That comes out at 10 o'clock Eastern. We do have a couple of speakers this morning. We've already had several ECB speakers over the U.S. overnight. ECB speaker Kerr spoke at 3 a.m. Eastern. ECB's McCooch, I guess that's how it's spelled or pronounced, at 7 a.m. Eastern. At 7:45 Eastern, we had Kerr. And then at 11:30 Eastern, we get ECB's Visco. And then at 12:45 Eastern, we get Fed Speaker George, and then we get Janet Yellen at 12:50 Eastern, U.S. Janet Yellen, and then after that at 1 o'clock, we get Fed Speaker Kaplan, And then at 4:30, as if that's not enough central bank speakers for one day. What is that? One, two, three, four, five, six, seven, eight, nine. At 4:30, we get Fed Speaker Powell speaking as well. So again, looking ahead, 11:30 ECB's Visco, 12:45 Fed Speaker George, 12:50 Janet Yellen, 1 o'clock Fed Speaker Kaplan, and at 4:30 Fed Speaker Powell. That's what's ahead. Let's look at what we expected yesterday versus what we got. Yesterday we opened in an OAOR gap down. We had the market opening at around 23.22. The primary expectation is for the market to make an early attempt towards 23.31, which is the low of the week last week, the low of Friday. That would be the range, the most recent range, and the most recent auction low. So the expectation is for the market to push higher. I expected a gap. I expected it to leave a little bit of a gap behind and then to start rotating down. So I expected this gap here to stay, and then for it to rotate down to the gap zone at 23.14, and then to stabilize somewhere in the middle, leaving a gap, giving us a bit of an island day depending on what we do the next day. That's the primary hypothesis, and that is the normal course of the auction expected. The secondary hypothesis was for it to have an open auction, test down first. So here the idea is very simple. You sit on your hands until you see which force is dominant from the open. So we expect an open auction, but you look for which force is dominant. Once you find that dominant force early on, the next question you want to answer as part of your hypothesis is this force that is dominant being confronted by the opposing side? In other words, as the market drops, per Hypo 2 here, as the market drops, is it actually, it's dropping to entice bids. That's the whole point. Valuation is dropping, and the price will continue to advertise again and again and again. With every tick, it's advertising a new price and seeking the opposing force. The market moves down to find buyers. The market moves up to find sellers. Please understand this. Again, the market moves down. It's advertising lower prices to find buyers. This is the same as when your supermarket has a sale on a product. Bananas are on sale this week. It is advertising lower prices, except a supermarket's not a two-way auction, but it's advertising lower prices to find buyers. It is trying to get people to buy at those lower prices. Once demand has been found, bananas will go back up to what they were priced at before. So same thing in the S&P, crude oil, NASDAQ, cotton, corn, coffee. It doesn't matter what the product is. Real estate, cars, it's the same process. So as we move down and we see that that's the aggressive side, the goal then becomes we have to answer the question, how good of a job is it doing finding those buyers? As it pushes down. So what is the market doing? It is pushing down. How good of a job is it doing? It is pushing down easily. It's not confronting any support, and it's continuing to push down, in which case you're looking for shorts, and you're staying out of the way of getting long in a market like that. But once we find those buyers, in general, we see a quick pop, pull back to a higher low, and a continuation higher if the low is in, if the market has truly found its buyers. In a gap zone here, like in Hypo 2, we expect the market to find it somewhere around the mid of the gap. That's fairly common. And then once it does, what is the next area that it's most likely to test? And the next area it's most likely to test is the most recent spot for the auction. Shoot, I hit the wrong screen. Is the most recent spot to test in the auction, and that would be the prior day's low. That's the next key area to test. And then with the range being from 23.14 to 23.31, then we expect the range statistic to kick in, and we expect it to go into a holding pattern in this new gap area that it had formed. Okay, that's the entire premise behind Hypo 2, and I'm telling you all these details, and I'm taking the time for that so that you can do your own thinking and your own planning. Yes, this is basic market auction theory. It's not mind over markets. It's Stadelmeier and traditional auction theory, but it is explained by Dalton and others and several others in that fashion. Hypo 3 was a quick attempt down, and we're looking for an open test drive, which means it opens, moves in a direction, tests an area, and pushes the other way. The important component here is the driving part. If we see a driving part up, we're looking for a continuation trade. If the continuation trade takes us into the prior day's range, then we are looking for the next key area to test is the MC point of control, which is the most traded price on these days. You notice this day is inside of the selling day. That day, the day after that is inside of the selling day as well. The day after that is inside of the selling day. So you take those and you combine all those together. That's not something I got off of a book. That's something that I observed and studied, and I call those microcomposites. And so once we test into the prior day's range, we're looking for first the MC point of control, which is this black line that is the most traded price across several days. And then if it exceeds that price, the 2340.50, 2340.50 is where this black line is. If it exceeds that price, then we're basically looking for the resumption of Friday's auction, which brings us back up to 23.48. And with the range being what it is, it becomes very, very extended, and we expect it to get stuck in the prior day's range. So we expect it to close somewhere inside of this range. This is exactly what happened yesterday. We should not be buffering at all from my end. I'm on fiber optics today. I don't see any dropped frames. Hypo 4 was for the opposite of Hypo 3. So we're looking here for an open test drive or an open rejection reverse in the opposite direction. We're looking for the market to become responsive early and then to have an impulse down. Then we're looking for a pullback. And if we do get an impulse down, given the range, we're likely to blow through the gap. And then if we blow through the gap again, we move to the next black line, which is the next MC point of control, which would have been 2309.75. Okay, now that's a quick crash course in auction theory and how this whole thing works. Here's what actually happened. So here we go. We start the day out. We start the day out with an open auction. So here's an open auction. Tests the low, finds buyers, tests the high, finds sellers, and it's going all the way back down to the low again, extends the low by a tick, and then immediately rejects it, and then we get this drive. This is what we're looking for. So now we're looking at Hypo 3 immediately, right? A test down fails. This is an open auction. On Hypo 3, we're looking for an open test drive. This isn't clean, but it's an open auction with a strong push up on this rally. Look at the delta. The delta moves from about negative 1600 to positive 1300. Pretty good delta on that. So now we're looking for the pullback to the mid, and here you have it. It missed it by a tick. Pull back to the mid, and then we expect it to push into the range. Pull back. There's the test of the range. Missed it by 2 ticks. Pull back. It pulls back to the IB high. Would have loved to have seen a pullback to mid again. And then you get another impulse up, which is there. And then where do we go? We push right to 23.40.50. 23.40.50 is the MC point of control, just as our plan shows. See that there? The MC point of control to the tick. It hits it. Now, the goal here is not to guess to the tick what things will happen. I'm not taking credit for this. I'm just showing that the market is auctioning very, very properly here. The market's following traditional auction patterns, which it hadn't done, for a while. January, February have been pretty tough months because the market's really not, it's a kind of a jammed or tight auction. Same as what we saw last summer. It's been really difficult to trade short term in this market. 23.40.50. Remember our plan. Here's our plan. right? Our plan, Hypo 3, there's the target 23, 40, 50 as you see there. And so we are on course for the market then holding this pattern. So the entire day's range is 23.18 to 23.40, 50. It's 22 points of range. That is pretty extended statistically. On the upside, the market does not move to the upside as far as it can move to the downside, as far as it can move to the downside. And so at this point, we expect what? We expect the market to just go sideways and finish sideways on the day, and that's exactly what we got. It's always nice to see a complete auction. I want to point out though yesterday that the low did not see a good taper. We do have on the 15-minute, we do have a nice little um, excess here in price, but in volume, we traded a fair amount here. There was a lot of interest at the low. This isn't a very strong low by any means, but what we've done is we've moved back into the same pattern or range that we've been in for the last couple of days. So here's a daily. This is my flex chart. This is the this is the draw, this is the selling day, and then we have spent the last few days sitting in the middle here. There's that 23, 40, 50 for anybody that has flex levels or is receiving flex levels through IRT. You saw the 23, 40, 50 starting Monday morning, and we are back in the range here. So it's very, very important to watch to see what happens today and how the auction proceeds from today. If the auction starts out up here and then spills over, so we're currently trading 23.36. If it starts out up here and then starts to spill into the body of this candle, which is I don't really care about the body of the candle as much as I care about the profile. If we see from the profile that we're starting to retrace and fall below, and the key figure here is 23.3175, which is the LVN, which was what separates the acceptance up here from the stem below of the profile. Once we start moving back here and we see a lower high, then we're looking short, and the target becomes 23.18, and then after that 23.14. Okay, hope I didn't lose you all. Let's give you your hypotheses here for today. Sticking this up a little bit. Overall, classic open in range in value. The expectation is for an open auction, push up into 23.3850. Oh, one more thing. We didn't review, for consistency, we didn't review the overnight. This is what the overnight range looks like, the overnight trade looks like. The market opened up where it closed yesterday, traded a fair amount up here until it got to the numbers in Europe, and then it started to drop. And then look at what we did. We traded a lot, so much down in this tiny little range here for the last couple of hours that we actually shifted the point of control down. This is very weak, and it's giving us this clean, clear area to watch out for. This is likely to present resistance initially, 23.38, although it's pretty tight. We're very, very close to it, so it might run through on the market on open orders. And so here I'm looking for the market to attempt higher and then stall and then start to move lower again, taking back some of what it accomplished yesterday. That's my primary hypothesis. So this morning I'm looking for an open auction. I'm looking for it to get to 23.38, get tangled up, and I'm looking for this to start moving lower this morning, and then trying to continue lower as well. And so the primary hypothesis for this morning is initially higher and then rotating down, taking back after testing the point of control, successfully testing the point of control. If it fails to continue higher, I'm looking for all of that energy to then dissipate to the downside. I don't know if it'll get to the gap zone today. The target would be 23.14. This will be our key target below if we do continue to sell. However, 23.14 to 23.38, is a fair amount of range, 24 points. I don't know that we'll get that today. It's possible. But that's the primary hypothesis. If we don't do that and we start to move lower towards 31 and then hold this point of control and then start to break higher so that we get a nice big move up, right? We put in a low, nice big move up, a shallow pullback. Then we're looking for 38.50, and we're looking for the continuation of 34, 44, 75, and then ultimately 48, and then we're back into this low volume node at 23.50. That would be hypo 2. So now we know what our targets are. Okay, fine, square. We know what our targets are to the upside. In either case, I'm looking for, it's Tuesday, I'm looking for wider volatility or wider range today. That would be hypo 2. Okay, those are the key hypos for today. I'll leave you with that. Excuse me. Real quick here. I'm out of time. This is what crude oil pit session looks like. The last few days since last week, since Wednesday, we've basically been trading in this range right here. So there's a new MC that goes up in this area, a new composite that goes up in this area. This is a 15-minute chart. The composite's point of control is right here at 47.78. 47.78, and that'll be the target for today. So this morning we opened and we're selling off. I'm expecting a quick bounce in this on the weekly close area at 48, and then I'm looking for a continuation down into that 47.70 as the key hypothesis for crude oil. All right, I'll leave you with that. Hopefully you're gaining something with every video and making sure that you're seeing the value of your plan. Remember, your goal is to have a plan so you can execute, just like a fighter pilot plots out their course, and then when they're up in the air, they're just executing the course. They're not thinking about where to go, what targets to have. That's already been pre-planned, and that's the goal here, okay? Good luck, everyone. Take care.